Well, good evening, everyone. Welcome back to the channel. So I see a few of you on here. Had to push it back a little bit, but yeah, my StreamYard crashed on me, so I had to reactivate it. So I am a little late today. But anyway, I see a few of you on here. So Sam Talks Finance says lined up and ready. All four of these have decently big weights in my portfolio, so I'm hyped to hear what you have to say. Yeah, I'll try to find everything I can on them today. Howdy there, Denny Keaton. Yeah, couldn't be on time again. Working on it. LOL. So here I am. So I wanted to see when these four might have dividends coming up again. They should be coming soon, but I guess we'll go ahead and just go to Yahoo and just look them up. So we had a pretty good week for, well, NVIDIA dropped yesterday, but NVIDIA's been on an absolute tear. So I guess we can start with that one since it's the newest one. So NVDY. So I'm going to be on Yahoo here because I only have one screen, so I'll let the comments kind of build up. So NVDY ended up, let's see, 21.26. We were down 5 cents. We're up in the after hours, 57 cents tomorrow. Not tomorrow, but Monday. Not used to doing a weekend stream. But yeah, so 99-cent expense ratio just came out May 10th. So we're like 10 days old. We've had 2 weekends in there. So I think we've been 7 or 8 business days of trading. 1991 is where we started. We're all the way up to 21. We hit 21.34, but we're at 21.26 officially. So this one will probably not pay a dividend until July, I'm thinking. It might be July because there's usually like a 30 to 50 day lag. So yeah, we're not going to see anything there in terms of dividends. But the thing to keep in mind with NVIDIA, the stock has been running up a lot. So how sustainable it's going to be, how much it's going to keep going, who knows? It has an absolutely insane PE ratio, which we'll look at here in NVDA. Let's see. So we were down $4.14 yesterday to $312.64, down 72 cents to $311.92, or 0.23%. But look at this PE ratio, almost 200. It's one of the highest I've seen in a while. So at some point, in this case, what goes up must come down, I would think. Earnings are coming May 24th, so we could be in for a big surprise either way. We could keep running up or going down. I wonder, for those of you that are really involved,
Depend keeps you drier than ever.
the streak comes to an end.
So you can say,
where is it now?
Yes to more
Oh,
than
they're
ever.
moving it around on me. They've got it in the middle of the screen now. They used to have it up here. Oh well, the streak of no noisy ads comes to an end. Oh well, I paused it for now. So
Yes.
here they go again.
Yes.
I am gonna find something different pretty soon. I promise. Anyway, but just the layout on here shows me things the way I like to see them. So see earnings here. We had Q2 of 2022. We had a barely beat. They missed by a wide margin in Q3. Q4 they also missed, and that's what caused the stock to drop a lot. In part, Q1 they had a slight beat. We'll see what happens in Q2. If we have a big miss, we could be down for another drop. But long term, I would say I'm bullish on NVIDIA for long term. But if the stock starts to drop, this may not bode well for the NVDY fund. And I think from a dividend standpoint, we should expect the dividend maybe July. Now, those of you that emailed me, I know I've been saying this for several days now, but I do fully intend to get back to you all as soon as possible. I think 4 or 5 of you emailed me, and I will get back to you. And I'm working, I need to get Jay on here as soon as possible. I haven't actually directly reached out to him yet, but I'll do that very soon for sure. Now let's look at APLY. So, and we'll do a quick spot check on comments here. Let's see. I think we have a big hockey game coming up tonight here. Let's see. All right. Yeah, what a week. I know, since I spend so much time favoring my West Coast fans, I've got to kind of cater to the East Coast fans at some point, right? So, Mr. Yahoo. Yeah, what did you tell me? Google? I did use Google, but it just doesn't quite show things in the format that I like. So, but yeah, okay. Caught up on comments. So, APLY is 21.23. We're only 3 cents off from the 21.26 of NVIDIA. And look at that. So we were up 1 cent. We're up 26 cents in the after hours, or 1.22%. This one, I think, just turned a month old. So what was it, April 17th or 18th that it debuted? Which ironically was right around the time that Tesla's earnings came in bad. How would we have been if we didn't buy into TSLY? We would be up like just $1 in this one. I would think this dividend would be coming in June, since we're a month ahead of NVDY. And I think Berkshire is coming soon too, the Berkshire fund, and there's a Coinbase fund on the way. I can go to the list of all of them, but let's see. I don't think we have a declared dividend yet, but it should be coming in June for sure. So yeah, nothing there. And in the futures, we're down. Let's see. Do we have? No, this is because it's a weekend. This is where we closed Friday. So we were down 109 in the Dow, 30.94 in the NASDAQ, 11.14 in the Russell, 6.07 in the S&P. Let's see how we're doing in Apple stock. Because remember, these underlying stocks have a big bearing on the performance of the ETF they're indexed for, right? So Apple is up to 175.16. When are their earnings? July 26th. July 26th to 31st is the window. 178, 1 year target estimate. So we're just about fairly valued. PE ratio is a lot better than NVIDIA. So your safer bet is definitely Apple. And with that, yeah, dividend, 96 cents. I'm not sure if it's paid once a year in the stock, but we don't really care about the stock. We're waiting for the big fat dividend in APLY. So that's that. And as far as earnings history with Apple, see, this is what always throws me off. So 3 of the last 4 quarters, we beat earnings. Quarter 2, 2022. Quarter 3, we beat. Quarter 4, we missed, but for some reason the projections were a lot higher, possibly because that's when the new iPhone comes out. So that's when sales are typically the best, I guess. But we settled back out. Quarter 1, beat earnings again. This should actually be very easy for us to beat earnings, but that's not till July. But with this projection here, that should be very doable for them to beat earnings. And then OARK, and then I guess we can look at Kathy Wood's fund, take a gander at that, and we'll save the best for last. So we're at 1562 in the YieldMax ARK Option Income Strategy ETF, or OARK, up 1 cent in the Friday trading. And then we're up 37 cents in the after hours, which would open Monday, up 2.37%, or 37 cents. Now this one, we just had the dividend come in way lower than expectations. So let's see. Oh, it's going to go to options again. Another built-in quirk of Yahoo. Remind me again here, what site did you give me as an alternative to Yahoo? I forgot already. My apologies. Okay, let's see what we got here. Do you like Seeking Alpha? Yeah, I do, but I've already forgotten my password, so I've got to get past the paywall on there. But yeah, I'm actually a big fan of Seeking Alpha and the engineer that writes for them. He's on here a lot. All right, someone has a story. I always like stories. So here we go. Here's story time. I accidentally sold puts on CAR at a $200 strike and collected $19,600 in premium. Oh, this sounds like something I might have done before. CAR was only trading at 160. I had it confused with the price of my BA and distracted. Oh, so what happened? Oh, Robinhood ended just closing it out and assigning me the shares. Oh, shoot. So no losses, but now I have 500 shares of CAR. Just going to ride it up for a bit. Okay. You know, I've looked at some of these premiums, and it's really exciting. If you buy them like way in the money, you can make like a full year salary in premiums. Very tempting to do if you're kind of looking for the easy route. But when it backfires on you, it's not so easy, and it'll give you heart palpitations for sure. You said, let's see, because the underlying moved past the 5% upswing for OARK. Is that why? Okay, we'll take your word for it. Let me look at, what is KAR? Oh, Avis Budget Group, like budget rentals. So you did puts on that at 160. Well, you would have been in the money anyway, because it's 160.32. So you would have been in the money on that one anyway. Let's see. Do I ever do stock lending? Robinhood offers it, but I haven't made a move yet. I do it on E-Trade, and I don't think I've started on Ameritrade. I had to move over to Ameritrade because that's like for my company. That's the broker that's like on the list, but E-Trade wasn't. And I already had kind of a falling out with E-Trade anyway. Funny thing, my account that's still there that has like one stock, they have me flagged for some reason. So I go in and it like texts me and emails me to let me know somebody signed into my account, which was me. It lets me know that I signed into my own account. So they have me flagged for some reason. But when I go there to check that one stock, and I think it was one I couldn't move, like 10-cent holdings or something like that. I'd like to get it out of there before it drops to 10 cents in value for sure. Because this one peaked at like $95 in February, and it's lower since then, but it still have a little bit. It's probably worth 2,500 or so, but want to get it out eventually because it's dropped like $10 since January 27th. Might just sell it and take my, just take my lumps and move on, but we'll see. McCarthy says debt ceiling negotiations paused until Biden returns from G7. Okay, what a charade! Just popped up on my phone there. So yeah, long story short, yeah, I do the stock lending. I think I might have to get it set up again with my new broker if it didn't move over, but there's other accounts that I get money in. It can be pretty good. Sometimes it was like $50 a month, so it's like nice passive income. Sometimes it was exceeding my ad revenue on here. Let's see. Do you have? Come on, comment. Do you have any particular stocks you feel tend to get used more in lending? Great question. I was actually going to answer that before you even asked it because I noticed it tends to be stocks that are like more retail. Like if you have Smile Direct and things like that, or Office Depot, things that have really been plummeting for years, they seem to do better for some reason. Like I was getting a lot on Smile Direct, but the funny thing about it, I've lost so much in Smile Direct, it's almost worthless. So what I'm getting in stock lending money, there's no way it's ever going to offset like what I've lost. So that's kind of a bummer. 10 Cent and Clip. Oh, are they? Yeah, it seems similar. They're both Chinese, right? All right. What else we got here? Oh yeah, ARK, and we're getting a T-Mobile ad. Someone was telling me T-Mobile was a good investment. Okay, so ARK. Let's see. Our last dividend. Let's look. Dividend only. Let's see how we're doing here. 36.5 cents. So if we annualize that, why is this freezing up on me here? If we annualize that, it would be 36.5 times 12, 438 divided by 1562, 28%. So not our best. But if we take it based on the average of 5 months, it's 1.09, 0.769, 0.51, 0.365, 5 months. That's 69 cents a month on average. 69, huh? So 835 divided by 1562. So historically, this is paying a 53% dividend. So if I was designing a thumbnail, which one am I going to put? Am I going to put the 53% or 28%? Take a guess. 53%, right? So, all right. So that's that. Now the best for last. So we'll breeze through these fairly quickly here. Oh, let me look at ARK first of all. This Kathy Wood. How's she doing? Miss Nutcase. 38.70, 42 cents. Down Friday, 1.07%. We're up in the after hours, 24 cents or 0.62 to 38.94. And let's see how we're doing for the year. Look at this year-to-date total return. She's on fire again. She's lost her nutcase title so far. She's a genius again, right? Because we're up $8 in the fund, 24%. How about that? Well, look how far we were down, though. See, this is the thing. This is the thing when we start to recover. Now, the funny thing, if you were to do this, if you were to put your hand over the middle of the chart here, from March 2020, basically the peak pandemic time, look at that. We would be relatively flat aside from the run-up we had during the pandemic. Wonder what caused that run-up. Was it stimulus money? Retail money? I'd like some theories on that. Oh, here comes the rain again. Okay. So we peaked at like, look at that, 137. So I feel bad for anybody that got in at the peak there. Those were some crazy valuations. Hopefully some of you, if anybody did that, hopefully you bought here and got out here because that was the time to get out. Although conventional wisdom would have said, you know, they were doing another stimulus bill in March of that year. So you would have thought the market would have kept going, but we didn't go. Basically, a lot of stuff peaked out like in February 2021. So let's see now. Yeah, 23.88. And does ARK actually pay dividends? Let's see. And then we'll get to our favorite fund for sure. Let me see. There's some of you haven't been on here in a while. Like I haven't seen Join Jen in a while. I haven't seen Neil. I haven't seen a couple of you. So maybe I ran you off. But oh well, you know the core is here. The people that are meant to be here are here, right? Okay, no dividends on that one. So now let's go to TSLY. All right. Typical Florida weather out here. It's raining in my backyard, but if you go 10 miles away, it's sunny. It's not raining at any of the beaches either. But I think it's coming down. All right, let's see how we're doing on comments here. Okay, we addressed that one. TMUS for strangles. Oh, strangles are a little bit over my head. You want to explain strangles to the audience? Other than strangling Kathy Wood? Well, we're not going to do that now because she's doing better. Market should spike this week when Fed comes to debt agreement. What do you mean Fed comes to debt agreement? So the Federal Reserve and then Congress would come to the debt agreement, right? But you're right. That should happen. ARK, let's see. ARK needs to change the holdings for innovation. Yeah, they should. Oh, here's someone I haven't seen in some time. How much do you receive in dividends per month if you don't mind sharing? God, I'd have to add it up. In my fake account, I'm doing really well. You know, my $200,000 play money. I just put everything in TSLY, and I was making like 75%. So that's a little bit of a joke. For some of you probably get that on here, a little inside joke. I think I make at least between 1,000 and 2,000 a month. Probably closer to 1,000, but I'd have to add it all up. You know, I haven't really been keeping track lately, but that is something I need to do. Definitely not full-time income, but getting there for sure. I know there's one stock I have that pays like $400 in dividends every quarter. So that's like $100 a month just on one stock. But yeah, I'll have to look. I think between everything, it could be maybe 1,000 a month, but not full-time income yet. So look at this guy. He's not making full-time income in dividends. What does he even know what he's talking about? Well, I'm getting there. If I changed my portfolio and put everything into dividends, I'd be there. But I haven't done that yet. I have 401ks. I have brokerage and real estate. I could do one of these moves. Like I could sell the house, liquidate all the 401ks, really put my money where my mouth is and just put everything into dividends. But I don't want to do that. Plus, I mean, where are you going to go? Housing's so expensive now. What are you going to do? Rent again? All right, let's see. He says, a strangle, sell a putt, like putting in golf. We're putting now. I know you mean put. And sell a call. Sell a put and sell a call. Oh, okay. So like the strangle. Yeah. TMUS doesn't move radically. So that does sound like a good strategy, actually. I've never done one myself, but I have heard of it. So that qualifies me as a YouTuber. All right. So that's a good note to keep there from Mr. Hoffman there. Do strangles on T-Mobile. Doesn't move too radically. Well, you could probably do covered calls too, or poor man's covered calls. You just use a ridiculous amount of margin. Yeah. Hey, to each their own, whatever gets you more views, right? Only at 150 a month, but you have to start somewhere. That's true. Some people are at 20 or 50 a month. So, you know, it's all about getting started. Just like when you save money, it takes several years to really get going, but once you get really going, 100 becomes 1,000, and then next thing you know, it becomes thousands, right? So that's the trick. Anyway, or you get free Spirit miles, which I'll never use because they're a bunch of bums and won't fly with them anymore. What stocks do you have? Oh, throwing questions like this at me. What stocks do you have that pay qualified dividends? Only qualified stocks. I only hold stocks that are qualified to be in my portfolio. I know what you mean. I'm kidding a little bit. Qualified dividends. I'm not sure, to be honest. I know I have to claim at least half of my dividends and taxes, which is really annoying. I have to, like I said, because I used to reinvest my dividends, and I haven't been really keeping as close of track this year, but I need to get back on it. I've had some crazy spreadsheets and stuff like that. I think when I was spending more time, like more office time, I was more inclined to sit there and do that if I had some gaps in between work tasks. But I know that I would say probably half of them are qualified because I have to claim them in taxes every year. Okay, I sold all my clip. I'm excited to see APLY's dividend. Yeah, like I said, I think APLY is definitely a safe bet. What qualified dividend stocks do I hold? What I'll do, I'll pull up all the stocks I hold one day. I'll do like a THB portfolio review. I know I'm overdue for that, but what I can do real quick. So I told you I hold 10 cent holdings. That's the only one left in the E-Trade. I'll go to Ameritrade here and I'll tell you what all I hold. How about that? So let me see. And I'll do a portfolio video one day. Oh, that's okay. I think you double. Yeah, you fixed something you said in the other one. Okay, so stocks that I hold, I have Avid, ticker symbol AVID. I have Car Gurus. I have some Dollar General, Horizon Therapeutics. I have a stock called Inseego, which I'm down a lot, and holy crap, should have got out of that one. Intel's down a lot too. Some of these, I probably look foolish for staying in some of these. IQIYI, which was a Chinese Netflix, which was good during the pandemic. Should have got out of that one a long time ago. I've got JP Morgan stock, P-Lab. Some of these I'm up pretty good in. I'm up 35% in P-Lab. I'm up only 18% in JP Morgan. The Avid one I'm really greedy on because I was up. That used to be, probably should have sold it. It was up to $40. It was a nice one. I timed it perfectly during the pandemic, but I'm up like 158% in there. I should just talk about that one the whole time like some other YouTubers do. I should just say, oh, look at this. I'm up 158% in stock. I'm a genius. And I should make it like that. I put everything into that one. Because some of these people, I don't know, like some of these big YouTubers, I don't believe that they're as smart as they come across. Palantir, that's definitely a buzz stock. I'm down in that one. I have some QQQX. I've got QYLD. I've got SKT. I've got SVOL. I've got AT&T. TSLY, obviously. I'm only down like 4.5% in that one. Funny thing, I have some of this one. I don't know if any of you have followed that guy, Jeremy, on here, Financial Education Channel. But for whatever reason, I got some of his, when he talked about VGFC, which I called the Very Garbage Food Company. I have some of that, but it's pretty much worthless. That'll end up being a tax write-off. And then I have Warner Brothers, because that's split off from AT&T. So let's see. That's, I think, my combined accounts. I have other stocks and other, like in another account, I have some Google, I have some Apple. I know I'm not seeing everything here because I'm only looking at one. Let me look at the IRA. Because I used to have more. Do I have any closed-ended funds? Not that I know of. Give me an example of one. I think there was one called CEF or something. Let's see. Okay, so I named all of those. Oh, I have call options in Meta, which are up 46%. I'm a genius. Tesla, ooh, not so genius on that one. I have call options that are down, way down, and those are going to expire worthless. I got call options in Wayfair. See, I swing for the fences when it comes to risk like this, but it's only a small amount. So basically, here's the funny thing. Everything I gained in the Meta call options, I lost in the other two. So it's a wash. All this effort for just a wash, you know? And it's not even a car wash. I don't even get my car cleaned for it. Disappointing. Anyway, and let me look at, let's see. And I only do this for core fans here. I don't do this for everybody, so feel special. It's only for those of you that are watching, which there's like 14 of you now. So the whole world won't see this, right? It'll just be our secret in here. Oh yeah, I do have some call options at Danaher and another account. Let me look here real quick. Give me a second here. Let's see. Yeah, I'm not checking my stuff daily like I used to. Anybody golf on here? Just wondering. I'm trying to get my game back in swing. No pun intended. All right, what other stocks? Oh, yeah, so there's some Apple, some Amazon. I'm checking my other account here. I wonder if combined, I wonder if I have more money than that other channel. I don't know. I don't want to disclose that because there's some idiots that follow that. Like, here's the thing: we're all smart people on here. We all understand money, but there are people out there that think that if you have $20,000, they think you're rich. Literally, like they'll say, "Oh, why aren't you retired?" And it's like 20 grand. You think you can retire on 20 grand? Give me a break. Like some people just have no concept of money at all. Not to say they're stupid. They just have money's not their forte. Believe it or not, there's some really smart people that are just bad with money, you know? Oh, was that a yes about golf? You golf? Are you in Florida too? I can't remember. We should have one day, we should have a THB fan meetup, set up like a golf. Here's the funny thing. So I golf, but I'm very inconsistent. Sometimes I hit great, sometimes I can't hit at all. And what I hate, because I like to go out and just have fun, I hate these obsessive scorekeepers. Because what I like to do, a lot of these courses, they let twosomes, foursomes, like so they let a lot of people off back to back. So you've got people right behind you a lot of times. So if you don't hit a good shot off the tee, I say just take a drop, just take a drop and just keep moving and keep score. But it doesn't have to be like the PGA. You're not professional golfers, But I've in my former golf group, I had one person that was really a jerk about keeping score. So I said, look, I'm just out here to have fun. You know what? If you think I shaved a point or two, just give me whatever you think I had on your scorecard. Knock yourself out. I'm not playing for money. It's not like investing. Let's see here. He only has 117,000. He put in 100K when he started the channel, so he's made 17,000. That channel who will not be named. Oh, you're on Long Island. Oh, cool. Another. Would that be considered upstate? No, because that's like by the city. But you're not in the city, so that's cool. I like the difference. I meet a lot of upstate New Yorkers, like I say, and there's a big difference between people from the city and people from upstate. But a lot of really cool people from that state, I have to say. I feel like I'm somewhat New Yorker myself, the way I approach money. I'm kind of I wouldn't say I'm a tightwad, but I'm a good negotiator and stuff like that. And I've learned a lot from a lot of you, actually. So anyway, I thought you were going to tell me he put in 117,000 and lost, only has 100 now. That would be funny. Well, yeah, Long Island, it's an island, so the whole thing's kind of beaches, isn't it? Have you been down to Florida? Let's see, I think I missed some of this. Danaher is primed for a mean reversion. Well, it's been mean to us, I know that, but you're saying reversion to the mean. Here's my thing. So I'm a little bit irrational when it comes to investing, but sometimes my instincts are right. Like, look at NVDY. They were laughing at me when I went to Vegas, my investor conference, because I had this big, swing for the fences trade. But if you look at it, like, I'm the one that had the last laugh. not really, because I sold out in February. But if I would have held on, it was a blockbuster trade. You know, the stock's basically more than doubled in value. But Danaher, I'm gonna hang in there on Danaher for sure. All right, let me see here. I'm getting distracted here. NVDY. Look at NVDY again here. Because it's up. It's more than doubled. How about this? Since October 14th, we're up 178% in NVIDIA. So if you had bought call options, if you bought leap options in NVIDIA, you would be really rich right now, and you would be the one with the last laugh. And you know what? My instincts were right. I just sold too soon. So I wonder, one of you that really pores over the technical analysis and all that, I want one of you to look back at the chart. If you had bought in October 14th, 2022, would you have held all the way? Or would you have looked at the chart and said, oh, it's pulling back and I'm going to get out? I want one of you to tell me, because, you know, we're all perfect in hindsight. All right. Oh, all the time. Oh, cool. Well, yeah, Florida's a great state. Yeah, a lot. I think almost every New Yorker has relatives in Florida, right? Inglewood was close to where the hurricane hit. But yeah, Tampa, I'm in Tampa too. So cool. Really cool. All right. Let's see. Where are we? Oh, Danaher. So you're claiming reversion to the mean. A lot of people, I'm not going to call that a buzzword. I mean, I do believe in reversion to the mean, but we're down over the past 2 years. We're down 10% in Danaher. So you could say that over the last year, we're down 9%. But you know what? We're due for a good earnings. And like I said, if you follow that chart, I mean, I do believe that I don't want you to think like, oh, this guy said this about this chart. He doesn't know what he's talking about. I mean, I've looked at the chart over the last like 5 years, and the patterns are the same. This stock is going to come back at some point. Just whether it comes back before our options expire or not is the question, right? Let's see. You get out at 100%. No way should you have held NVIDIA till now unless you left some. Well, you know, it's funny you say that, because I used to think exactly the same way. And based on your comments, it seems like we really think alike. Because my threshold for any stock and whatnot, I said, okay, if I made 100%, I get out. 100% gain. You know, I said that's perfect. Like 100% is a perfect number. You know how many times I've done that though, and the stock kept running? A bunch. It's happened to me a bunch. But then I feel like what happens if I say, okay, I'm going to stay in longer. Good example, like I just mentioned, Avid stock that I'm in. I was up like 200% in that. I got greedy because it was up $40. Then it came back down to 20. So I probably had like a 300% gain in that one. So why didn't I sell? I just figured for some reason, 2021, I just figured it was going to keep going. But I'm still up like 140% and still haven't sold yet. But I've had stocks, like one of my favorite examples was Upstart, August 2021, probably one of the best performing stocks ever for me. I was up like way up, right? Held on, got greedy, and look what that stock did ever since. Now I'm like in the red. All right, Damon Raydell. I know it's not a buzzword. Bollinger Bands are wider than the Keltner channels. I don't even know what Keltner channels are. That's a new one for me. And Danaher is on the bottom Bollinger, time to go up. Well, there you go. We agree. It's going to go up, right? So you're claiming in this case reversion to the mean is appreciation back to the mean in that case. Let me look at it. Let me do my special analysis here and see. Let me look again. All right. I'm just a YouTuber, keep in mind. I'm a YouTuber that happens to have undergrad and master's degrees in finance, but what does that really teach you, right? I did learn a lot of this stuff in my program, but when you're not exposed to it every day, you start to forget some of these things. Like I even noticed, I watched one of my videos from a year ago, and I used words a year ago that I'm not even using anymore. So I kind of said, oh, how about that? Talk about reversion to the mean in another way. Okay. Let me see. So I'm thinking on this one, where were we? We were at like 270, January 23rd. The last time I did this trade and it worked for me, like I told you, was November of 22. If you go back a year ago, we're going to time travel a year ago. May 20th, we were at 251.80. Okay, this is going to get you excited again. By June, or I'm sorry, by August. This is the window I'm talking about for this trade. I just happened to get in too early and it dropped, which I didn't expect. All right. So the window for this trade has been the summer, basically, like before Memorial Day and then after August, before Labor Day. Basically, before Memorial Day and right before Labor Day is the window for this trade historically. So the chart, let me just pull it up on here because a picture paints 1,000 words, right? Even though I've probably said 1,000 words before I pulled the picture up. I know, frustrating, right? I'm a talker. That's why I'm a YouTuber, you know? So anyway, and remember too, when it works out exactly right, I knew exactly what I was doing. If it backfires, I had no idea. I'm just kidding a little bit. Okay, look at here. 1 year target estimate 278.71. Earnings per share is a little low. PE ratio is low. So if you applied NVIDIA's PE to that, we'd be through the roof, right? Let me see earnings here. We're going to have at least one earnings report in this one, July 19th. Okay, so that's the one. Now, we've beat earnings the last 4 quarters. And look at the threshold. It's really low for Danaher. So that should be a very low hurdle for them to exceed. Dividend date, it pays a dividend too. All right, so what I want to show you on the chart here, and I'll even impress you, and I'll go to my full chart view, still on Yahoo. I think we lost Varden. I haven't seen him comment in a while. Okay, so look at this here. Look here, I do a little bit of charting myself. Look, I got the MACD, I got the RSI. Don't ask me why I have the MACD showing up twice, but it's there. I know, just when you thought I knew what I was talking about, right? But look here, I got Bollinger Bands on here too. So what I see, let me go back here year to date. Why is this all the way? This view frustrates me a little bit. Oh, what I was looking at on my phone here, I'm trying to pull it up here too. So the setup for this trade, and it could be coming again. But first things first. Okay, when the Bollinger Band narrows, that's usually a sign for a trend reversal, which that played out because after April 20th, it started dropping, and then the Bollinger Band widened. It looks like it's still wide, but it's on the downside. Moving average here is moving down. And the Bollinger Band, I take the Bollinger Band to be like your basically normal distribution curve, so to speak. So almost within a 95% confidence interval, the stock's going to trade somewhere within there. So it looks like 250 is the maximum at this point, which I think is undervalued. We were at 274 in January. Let me go back again. Okay, so when this trade, let me go back a year because I want you to be able to visualize this here. Let me go 2 years so you can see it better. All right, so if you look at, let me see, May 2nd, where were we May 2nd of 2022? The price was like 249.24, right? By August, we were at, by August 15th, we were at like, according to my phone, we were at 302. So we went from 251 to 302. So we gained $50. So this trade would have set up perfectly in August. I mean, from May to August, the dates that I'm saying basically. Then we started pulling back by Labor Day. So if you had like a September 15th expiring leap, you would have been golden. Now, when I did this in November, it was a much narrower move up. I did this, I only held it for like a week. I think I got it on the 8th. And then by like Veterans Day, so within 3 days, it moved from 253 to 271. And I looked at the chart and I determined that it was going to do that basically, and it did. But for whatever reason, this time it hasn't quite worked out. Now, go ahead and tell me, Damon, why you think it didn't work. Because my analysis here, I do notice I probably didn't look at the Bollinger Band as close as I should have. But I did see the narrowing, which does suggest a trend reversal, which we kind of did see, unfortunately. So the trade, long story short, I guess the trade doesn't work out every time, but I guess it works more often than not. Anyway, lock in profits and jump back in. Yeah, you're right. That's good. That's good. Um, yeah, I should do that. But then, see, I feel like then you're paying a higher price and whatnot. But you're right. Lock in 100% and then jump back in. You're absolutely right. Were my leaps in the money for NVIDIA? I think they were, but they weren't expiring till like September, so I could have just kept rolling. All right, Damon, what do you think about my analysis there? Any feedback on why you think that this stock dropped? I do think it's going to come back, but we don't know. But like I said, in November, it was one of my most successful options trades in November. It didn't work because in the end, we're all idiots. No one can truly time the market. Well, that's true. I mean, I did. It worked for me in November, and then I've told you about the $70,000 example from 2021. So I think it's worked more often than not. But it's like anything else, I guess. It works until it doesn't, right? So, and we all can be idiots at some time, but there's definitely those of us on here. We're definitely smarter than the general public, I would say. So, all right, that was Danaher. Oh, I'm holding you all in suspense here because I've still got to look at Tesla. So OARK, we figured out their dividend. So let's look at TSLY now. TSLY, good session here. We're getting into a lot of good stuff here. All right, so TSLY is actually recovering. It's almost back to where it was when I bought it. So I'm only down like 4% at this point. We're at 14.25, which we were up 21 cents or 1.5%, May 19th. We're up 12 cents in the after hours or 0.84%. Year-to-date total return, we're actually crushing at 27% that we're up. But keep in mind, we dropped before then. So how are we 1340? How are we up 27%? If it's, let's see, 1340. I'm confused a bit. Year-to-date total, daily total return, because we're basically up $1. If my calculations are right, let's see, 1425 minus 1340 divided by 1340. Hey, I will say this: I'm glad I don't run a stock service because I've know other people that started stock service and they got sued because one of their recommendations was wrong. So that's what happens. It's all fun and games, you can get like 80 customers paying you recurring revenue. Next thing you know, you think you got full-time income, then one of your stock picks is wrong, and then next thing you know, you're getting sued, But like I say, nothing that I say here is advice. This is all hypothetical stuff. Some of it may work, some of it may not, right? Anyway, all right. So yeah, TSLY is coming back. And let's see. So, because Tesla is coming back, right? So I'm still long-term bullish on this one. I don't know if I'll put more into it, but I'm definitely long-term bullish on it because I think Tesla is due for a big run-up again. I might have to, so those leap options I have that are about to expire, well, it looks like they're going to expire worthless. I'll hold them, but I may roll down. But I've got to quit being so stubborn because what I do, I hold them a lot of times until they just end up expiring worthless. And I've got to get better about rolling them. So look at Tesla. We had a good day Friday, $180.14. So we're trading above Apple again, which, like I say, it was really weird seeing Tesla trading to the south of Apple. Definitely weird. So we're $5 ahead of Apple now in Tesla. After hours, we're down 15 cents. 1 year target estimates 181.21. When do we have earnings in Tesla? July 18th. So the quarter 1 earnings that caused our stock and our ETF to drop, we met earnings, but the Wall Street didn't like that so much, so we had an overzealous overselling. July 18th, we come out with earnings again. Hopefully we'll beat them, and hopefully Tesla can get back to like a $300 or $400 stock. Like I said, they've got some good things in the works, and Elon Musk will be more focused on them now that he's got a new CEO. Not sure if you guys saw my community post, but I posted a picture of the new CEO coming to Twitter. So Elon, he'll be more focused on Tesla again, hopefully. So Yeah, I'm still long-term bullish on that one. I'll probably of the other ones, I'd probably get into the APLY one, and yeah, maybe NVDY, and maybe some of the others when they come. So let's see, what other comments do we have here? TSLY does better if Tesla is flat or slightly down based on Jay's email, which calls they choose. Yeah, but it's recovering. Now that Tesla is coming back up, TSLY is coming back. YieldMax needs to be more transparent about exactly which calls they're holding and their expirations. Well, I don't know how often they update their site, but we'll go there next. We'll go to the site and look that up. But what I noticed, because I read your email and his explanation did make sense, I'm going to have him on. So hopefully I'll announce that well in advance so you all will be able to pick his brain. That's the goal, you know. Have all your questions ready. Be getting your questions ready now so that when he does come on, we can pick his brain. Because I want to make sure I understand this too, because I feel like I don't fully understand this either. Because what I see happening, I see that as Tesla stock's going up, I see TSLY going up too. So, but that doesn't quite jive with the email. All right. Oh, Glenn Furs is back. Why the name coaching in your channel? You need a disclaimer blurb at the beginning of every live stream. What kind of disclaimer blurb do you want? This isn't coaching, what I'm doing? Well, I was more coaching. I started September 2021, but it got to the point that the only audience that was showing up was for dividends. So I used to talk budgeting. I used to talk options trading, credit cards. Credit card churning's a big thing I'm a big fan of. I've talked, debt management. I've talked just being good with money, fiscal prudence, as I say. So, I mean, I don't know. What do you think the name should be? I may change the name one day, but what I wanted to convey is that, what you learned here could be life changing. That was the idea, So what do you think? I mean, is this not coaching? Or if it's not, I don't know. Give me some other ideas. I did do a poll on the channel name. I thought about just calling it THB Finance at one point, but that sounds kind of, I don't know, too generic. I actually thought about financial education, but that name's taken. It can go up to 5% on the covered calls. All right, well, let's look at the site. We'll go to the YieldMax site here because I think that, let me see here. Keep the name, but protect yourself with text that says what you're saying. Text that says what you're saying verbally. Oh, okay. Well, I always say, nothing here is advice. Like the Danaher stuff, I'm throwing that out there because it's worked for me before, but I could show you plenty of things that haven't worked for me because when you are more aggressive with your trading, like I say, I only do this with a small portion of the portfolio. 98% of the portfolio is not touching options or anything like that. So the stuff I'm doing, it's almost like gambling, but like I say, that one has worked. So if you see that and you like it, it is what it is. It's not advice. It's just something that has worked in the past. But I appreciate the tip there. So, all right. Oh, YieldMax. Let's pull up YieldMax here. Max. Here. Okay. And our average dividends are dropping on the two. I guess there's only two of them that are actually paying dividends. So we're going to pull this up here. Let's see. You should post a disclaimer on the page just to. Okay, yeah, I appreciate the feedback there. I'll definitely look into that. All right, share screen. YieldMax. All right. OARK 28.11%. TSLY 37.10%. Let's go in and look at the options here because I think they do show the options they're in, but they may not update them every day. Here are all the funds that we can expect from YieldMax. Apple, Amazon, Berkshire, Coinbase, Meta, Google, Netflix, NVIDIA, Square, or Block, and Tesla. So we've already got Tesla, NVIDIA, and Apple. OARK is not on here. Still to come are Square or Block, Netflix, Google, Meta, Coinbase, and Berkshire. So really, all of our really top-notch good companies there. Those are really like the big ones that you would want, I would think. Okay, let me close this out since I've only got one screen here. Close this, and then we'll go back here. Oops, what is this now? Where'd my screen share go? What am I? Oh, I'm not sharing now. Yeah, I appreciate that. Thank you. Okay, share screen again. Dang, where'd my StreamYard go? Not StreamYard, but where'd my YieldMax go? YieldMax. Just got to pull it up again. I had the PDF up. I wonder if that other guy has a disclaimer, the one that's on heavy margin and stuff like that. He seems like riskier than me. But that is the general, that's kind of the assumed, nothing is advice on here. And I do one-on-one coaching. I need to get that like listed, but I will do, for $50 an hour, whatever your situation is, I will do, if you email me, I will do one-on-one coaching, which I think that's pretty cheap actually per hour. And I can even offer packages above that. And just looking at the whole financial situation, credit, debt, things like that, things I see, things that could be worked on and stuff like that. But that's generally my rate, $50 a session for like an hour, which is pretty cheap actually. I mean, I could charge more than that, but yeah, that's I do that on the side. Okay, back to YieldMax here. Here we go. Okay, let me scroll here. There is, all right, for TSLY. Let's do TSLY. The other ones still say coming soon for the dividends. Coming soon to a brokerage account near you. Okay, so at the bottom here, these are the options they have. So right now they've got a June 16th expiring one, which is coming up here soon. That's 205. They've got a July 21st. So it looks like this just updated the other day. 175. May 23rd, which is going to expire like Tuesday. That's 185. June 16th again, 205. July 23rd, 175. So those are the ones I see. All right. So I don't know how much more transparent they should be on options, but that's what I see. So does anybody have anything else here? Anything else you want to look at? Because that's what I see with those. That's the insight I have. Hopefully that was useful, valuable. If you all like that, please remember to like, comment, and subscribe. Oh, someone else showed up here. JG1982. Advice has always been be aggressive as a young person or not wealthy. You need to be serious about snowball effort and learn from mistakes. Well, that's what I do. The younger you are, the more aggressive you can be. Yeah, I mean, I'm pretty aggressive. Like with my 401k, I do like large cap, S&P, NASDAQ. It's all aggressive stuff, which you look in the long run, what I've seen like with the S&P 500, typically over the last 12 years, we had that great bull market over the last like 12 or 13 years. And the S&P was averaging like 19% CAGR, I think. Or it was like, if you take the total return and divide by the years, it was like 19 or 20% a year. So yeah, I agree. The younger you are, the more aggressive you can be. But if the market, my approach, and I'm not saying anybody should or shouldn't follow this, but my approach has always been, if the market's going to be up long term, why not be more aggressive? Unless you need the money tomorrow. If you're investing, because a lot of people in retirement, they're still invested in their 401ks. They're still invested in their brokerage. They're still invested in all this stuff. So Let me see. That's recently updated. I didn't see the other day. I couldn't see your screen on my phone. Did it show what they bought into those options at? I'm not sure. I would say go back and watch it when you have like a bigger screen or something. But no, it doesn't show. It doesn't show what they bought in at. So that's a good question. Maybe we can ask that when we get Jay on. So, but yeah, like I say, if the market is up long term, I would say you're better off being more aggressive. Because, like I say, most people, even in retirement, they're still invested in the markets. It's not like once you retire, you just stop. I think there's too much like buzzwords, there's too much like buzz in investing, and not always a lot of critical thinking, I guess, because I hear a lot of, the same canned phrases. Time in the market beats timing the market and things like that. And sometimes, let's see here, it would be necessary to calculate the dividends. Yeah, yeah. Maybe we can email Jay about that. I need to get on these emails. I'll do that, as soon as possible. Like I say, hopefully tomorrow. So, but yeah, like I say, that is true. It's a corny statement, but time in the market probably does beat timing the market, you know. But like I say, all I've seen with a conservative allocation versus a more aggressive allocation is that your you limit your upside and you limit your downside. So with more aggressive, your downside is a lot bigger, but so is your upside. You're capturing more of the upside the more aggressive you are. I would say might as well just be invested in the market. Long term, typically, we've never been down more than like 3 years in a row historically. I know there's always possibilities of anything happening, but just going by history, um, you kind of have to look at that. And, it's a lot of these doomsday predictions turn out to not be true a lot of times. So I think that, at least for me, that's what I do. I'm more aggressive. So anyway, hope you all enjoyed that. Thank you for tuning in. Like, comment, and subscribe if you haven't already. And we'll see you on the flip side. Take care.